All right, so today we're diving into something really interesting in the world of Indian food delivery.
Okay.
Swiggy.
Yeah.
They're planning their very first IPO, and we're going through their pre-IPO document, which is fascinating. It's like a sneak peek behind the scenes of their entire business.
Yeah, you're right. It's like a goldmine of information, this document. Officially, it's called an updated Draft Red Herring Prospectus, but essentially it tells us everything from how Swiggy makes its money to the challenges that they're facing, how they see the market and their plans for the future. It's like essential reading for anyone who's even thinking about maybe investing.
So it's like their financial report, their business plan, and a sales pitch all kind of rolled into one.
Yeah, exactly. And I think the big takeaway right off the bat is that they're trying to raise a pretty hefty sum, up to $37,500 million, which translates to about US $450 million.
Okay.
So they're serious about growth. They have ambitious plans, that's for sure.
That's a lot of biryani.
Yeah.
But one thing that I thought was interesting is that it's not just about bringing in new money. They also mentioned in the document something called an offer for sale. What is that all about?
Yeah, good catch. So an offer for sale just means that some of their existing investors are using this IPO as a chance to sell off a portion of their shares,
Okay.
which is very common. It's something that happens all the time. And, it could be a sign that they believe that Swiggy's value is actually going to increase once they go public.
So they're cashing in essentially on their early investment, which makes sense. Flipping through this document, one thing that struck me as interesting is that they don't really seem to have that single founder, like that charismatic founder that a lot of companies, especially successful companies, seem to have.
You're totally right. The document even explicitly states our company does not have an identifiable promoter.
Huh.
So, yeah, their journey has really been shaped by a collective of investors and their management team rather than just one person calling all the shots.
That is fascinating. It makes you wonder how that kind of influences their decision-making process over the years. I mean, are they more cautious? Do they need to get everybody on board? Or are they more agile because they don't have a single person that's slowing things down?
That's a great question, and unfortunately, we don't have all the answers. But it is an important thing for potential investors to think about as they evaluate this IPO.
And not to mention, this is their first time on the stock market. So unlike a company that's been publicly traded for a while, there's no historical data to analyze.
Exactly.
No crystal ball.
Right.
So how do we even begin to value their potential?
It's tough. We do have this prospectus, luckily, and it gives us a glimpse into their financials, the risks that they've identified, and even hints at their future strategy. So let's dive in.
Okay, so we've got this basic setup. They're aiming for this IPO, they're looking to raise capital, and they've got this unique structure with no single founder at the helm. But as with any investment opportunity, I imagine there are some risks. What are some of the potential challenges that they're outlining in this document?
So they're very upfront about the competitive landscape.
So they're diving headfirst into a pretty crowded market.
Yeah. The document actually specifically calls out the intense competition in the Indian food delivery market. I mean, think about it.
Yeah.
You've got established players, you've got new startups that are trying to, get a piece of that pie, and then you've got restaurants themselves launching their own delivery services.
So how is Swiggy going to stand out? How are they going to be sure that they get those orders coming in?
Yeah, that is the question, isn't it? They actually highlight a few key strategies in the document. First, they're really focused on innovation.
Okay.
Constantly innovating. That could mean anything from new features on their app to expanding into new geographic areas or even, venturing into completely new food-related offerings. They have to stay ahead of the curve.
They can't just deliver food. They got to keep things interesting.
Right. Pricing is another big one.
Makes sense.
They know they need to offer competitive prices both for their customers and the restaurants that they work with. I mean, every rupee counts and people are always looking for a good deal.
It's a balancing act for sure, trying to keep everybody happy. Now, competition isn't the only thing that's probably keeping them up at night.
Yeah.
They mentioned some regulatory risks as well. What do they have to say about that?
Yeah, you're right. Regulatory changes are a big concern for any company, especially in a fast-moving sector like food delivery. They're particularly concerned about how shifts in government policies, things like data privacy, food safety standards, even labor laws for delivery partners could really have a big impact on their operations.
Yeah, one change in the law and suddenly they have to revamp their entire system.
Yes. Exactly. And it's not just on the national level either. Different cities and states within India, they can have their own specific rules and regulations as well.
Oh.
So, imagine trying to coordinate this nationwide food delivery network, but every city has its own unique set of rules. It's a lot.
It's a lot to juggle, for sure. It's like having 50 different kitchens to manage.
Right? And that kind of highlights just how crucial it is for them to be adaptable.
Okay.
One other risk factor that I thought was really interesting that they dedicate a lot of space to in this document is their relationship with their delivery partners.
Right, because without the delivery carters, they don't really have a business, do they?
Exactly. They acknowledge that, being able to attract and retain a large and reliable fleet of delivery partners is absolutely essential to their success, especially during those, peak hours or special events when the demand just goes through the roof.
Yeah, when everybody's ordering at the same time.
Exactly. And, we've all been there stuck with an empty stomach on a Friday night because every delivery app is slammed.
Oh, yeah.
So to address that, they're investing in things like insurance programs for their partners, training programs, different benefits to try to keep them happy and engaged. They even acknowledge the risk of potential labor unrest, like strikes or protests, which have been a big issue for other companies in this space.
It's good that they're thinking ahead. But, I mean, let's be honest, while competition and regulations are super important, at the end of the day, most investors just want to know, are they making money?
Yeah.
What can you tell us about their financial performance? Are they profitable?
All right, well, let's get into the numbers. Now, keeping in mind, this document is just like a snapshot in time. It's really focusing on specific financial figures, mainly for the periods ending June 30th, 2024, March 31st, 2024, and then going back to March 31st, 2022.
So just a glimpse into their recent performance.
Yeah, and one thing that really jumps out is their focus on something called GOV, gross order value. This is like a key metric in the food delivery world.
So it's not just about their revenue, it's about the total value of all the orders placed through them.
Exactly. Think of it as a measure of how much business they're actually doing. And the trend is clear. Their GOV is growing.
That's good. But growth doesn't always equal profitability. What's their bottom line look like?
Okay, so this is where it gets a little bit more nuanced. They highlight a figure called adjusted EBITDA, which sounds very technical.
Right.
But essentially, it's a way to measure their core operating profitability.
So are they making money from their core operations before all those other expenses and things?
Exactly. Now, I always encourage listeners to, read the full financial statements for the complete picture.
Of course.
But, for our purposes today, the key takeaway is that Swiggy is clearly focused on both growth and a path to profitability.
Okay, they're in it for the long haul.
Yeah, they're aiming for that sweet spot, expanding their reach while also building a sustainable and profitable business.
And then there's this whole thing with the pre-IPO placement, right? That pre-IPO placement where they offer shares privately before the actual IPO.
Yeah.
It seemed like a big deal.
It is. It's very strategic.
Yeah.
So by offering shares privately beforehand, Swiggy can achieve a couple of things. First, they secure funding from key investors. Often these are big investment firms, venture capitalists. And this early access is usually offered at a slightly lower valuation than what they're expecting the public offering price to be.
So it's kind of like a reward for those who are early believers.
Exactly. And it's not even just about the money sometimes.
Right.
At successful pre-IPO placement, it can generate a lot of buzz, positive sentiment around the company.
Sure.
It's a signal to the market that, hey, these big players believe in what Swiggy's doing. And that, in turn, can lead to even greater demand when the IPO actually launches.
It's like creating that VIP line at a popular restaurant.
Exactly.
And then everybody wants to get in.
Right. But, like any strategic move, it comes with risks.
Okay.
The price at which Swiggy offers these pre-IPO shares is going to be crucial. If they undervalue them, they could be leaving money on the table.
Right.
But if they set the price too high and the placement's not successful, it could raise some eyebrows among other investors.
Yeah, make it less appealing.
Exactly.
So for those of us who are following along at home, what should we be watching for?
I would say keep an eye out for any news about the pre-IPO placement.
Yeah.
If it happens, pay attention to who's investing and at what price. That information can give you a lot of clues about how the market is really perceiving Swiggy's value.
It's like getting a sneak peek at the recipe before they actually bring out the food.
Yeah, exactly.
And that's what's cool about these documents.
Exactly.
You get to see how everything works.
It's fascinating. It really gives you a view that you don't normally get.
So for anyone listening who's thinking about investing, this sounds like one to watch, for sure.
Absolutely.
Growing market, unique company structure, and a little bit of intrigue never hurts.
Yeah, for sure.
All right, well, on that note, we'll wrap up this deep dive. I hope you found it informative and insightful.
Until next time, happy investing.